Hello, this is John Piper with the weekend video clip, and it's Saturday the 4th of February. I'm looking here at a chart of the Dow. This is a 30-minute chart. One of the things I wanted to mention today was that markets are confusing. The market action is a fairly confusing picture, rather like an ink blot in fact. I mean, psychiatrists use ink blots to see whether the client or patient, if you like, is obsessed with a particular image. So if they see an ink blot, and every time they see the ink blot they think of death, then they're obsessed with death, and that's a basic theory. Similarly, when we see the markets, I mean, primitive man, uncertainty was very dangerous. It's very important for, as our brains develops over the millennium, to be aware of what's happening so we can make decisions, and if there are wild animals around, earthquakes, whatever might be threatening, you don't want to be confused, you want to make decisions and act quickly. Similarly with the market, so to avoid the confusion, we overlay some patterns that we find reassuring. Personally, I use 8-wave theory, but this applies to all techniques. And the point I'm making is quite an important point, is that whatever technique you use, realize that the markets remain pretty confusing and uncertain, and that you have to, all you're doing is putting an overlay which you may think has certainty but doesn't. Hence, of course, why we use stops, etc., etc. And it's quite important to examine your technique in the light of that observation, because if things aren't going well, then it may well be that the technique you're using simply isn't actually suitable for what the markets are actually doing. Right. Having said that, and I'm prepared to expand on that if somebody's interested. I mean, I might well do an article on the thing. I think it's quite an important point, although it may seem fairly obscure to some of you. Anyway, we have here the chart of the Dow 30-minute chart. So here's our peak here. We now have a very clear 5-wave decline. Wave 1 subdivides into 5, wave 2, wave 3, ABC 4, then a 1, 2, 3, 4, 5. So 5 waves down, ABC A wave, ABC B wave, followed by this much stronger action here, 1, 2, 3. Now this could be a 4, it could be the start of another decline, and we missed out on the 5th wave, or at least it was subnormal 5th wave on the way up. So I wouldn't be surprised if the peak's actually in here, and I'm looking to go short next week depending on what happens. Monday morning is often very important. I think it could be particularly important at this point. I mean, we could well be seeing the beginning of a major bear market. We haven't seen a bear market really since 2006, 2007. The 2009 low was the last major low. I think that we're overdue for something else. We've had this QE, etc., which has postponed the event, but all it tends to do is make it worse when it actually comes. So right now there's a possible peak. I mean, the sell-off may be of some significance. Maybe the people wanted to get short for whatever reason, but at this point in time we should get a good opportunity next week, I think. Just to go back and look at the historic situation here. Okay, this is the weekly chart. So see the low there, 2009, and it's been pretty much straight up. In fact, you can count 5 waves here, which is quite an interesting thing. So in fact, wave 1 and wave 5 are of a similar length, although not in percentage terms, of course, in that wave 1 here would double the situation. Wave 1 here has yet to achieve that, and be about 30,000 if we actually were to see a doubling there. And that could happen, of course. As I say, as I started saying, these things are uncertain, but we do have this possible wave count. So the level there is of some importance. I've also seen some people claiming, who've only been around a few years, that have been through all types of market condition. It's been well tested. Unless you've been through a bear market, so unless you're around in 2006, 2007, that's not the case. So beware, especially if you're selling options, especially deep out of the money options, as things may not go quite as planned if we do start a serious bear market at this point in time. I guess this the actual wave pattern since here doesn't really look complete. I mean, there's a 1, 2 there, one, that could be a 1, 2. So it could be all part of a 3. I mean, it could easily be that we do see a sell off here, but it may be that we've got things are continue going up at this point in time, but certainly there does seem to be a peak of some importance coming in. It is, early in the year, just into February. The peak was in January, so I think a decent sell-off could come in. It could well be a lot worse than that. Had to remain to be seen how that works out. Right, the DAX has a similar pattern. Peak here around 11.9. 1, 2, 3, 4, 5. A, B, C. I mean, this could be a triangle in the making. It's looking particularly feeble actually on the DAX. I mean, this may not be complete, but again, I think there's certainly a potential for the peak to be in here. In which case we're going to obviously slide down. You have got that reference point there, a bit of a spike, 11.7. Some importance on the Dow. Of course, 20,000 is quite important. Okay, FTSE, it's actually the minute chart, just to illustrate this big sell-off at the last minute. Let's go back. Rather confused wave count here. Possible 1, 2, 3, 4, 5. Not a good count though. Firstly, everything's very messy. Secondly, the third wave is actually the shortest, so it doesn't count too well. But we do have an ABC here, and then this sell-off on the last blip on Friday. Anyway, again we have a possible potential peak. So again, I'll be looking to sell the market if I see anything that's interesting. When it comes to selling on a Monday morning, I mean, you've really got to be on station when the market opens. I mean, we might see a little rally and a sharp reversal. If there's a selling spike, you want to get on board. If it's savage, then if you're not paying attention, 5 or 10 minutes can make quite a big difference to your entry point. So I suggest that that's something you want to bear in mind. If anyone wants any assistance, I mean, read the Way to Trade. There's plenty of ways to trade markets in that book. I mean, a system like Krautgap has got a good one. The 5-minute bar system is useful. So there's a whole lot of different ways of doing that, which you can apply these techniques, and it's important really that you know about those. Drop me an email if you'd like more details, and I'll do my best to help you if I can. Alright, finally look at gold this morning. There is the low we saw recently, around 11.20. I've got two counts here, two possible counts. 1, 2, 3, 4, 5. A, B, C. And then this will then count as a wave 3 starting up. Although it could be that we've already seen the 5th wave. So wave 1 may be doing A. That's right, A, B, C. I don't think we'll see that if equity markets fall away come Monday. That would be quite a positive count, suggesting we're going to see gold shoot ahead in coming weeks. The alternative count is more negative, and this is that it's actually a 1, 2, 3, 4, 5, and that we've therefore got a correction due with support on the 4th wave at 11.80. So another breakdown below 1200 over the next few weeks. In fact, there's a correction of this entire rally, which has lasted since the end of last year. That's about 5 or 6 weeks, 6 weeks say, so 2 or 3 weeks of downside could come in on gold. If equity markets are going to fall away, I think that's unlikely, as I said. But obviously, if we start moving ahead, you wanted to get on board. So an extreme stop above that level there is one thing you could consider. I'm going to put an extreme stop in myself on that, in fact, because it's quite a key level. If we break above there, then that would negate the negative count. Right, that's all for today. I found that interesting and useful. Lots happening, as I said, in one of my reports this week, and there could be some substantial moves starting up if you want to get on board. Have a great weekend. Thanks for listening, and bye for now.